Welcome to Your Money, Your Call. It's bonds versus equities. I'm Mark Todd from the NAB, and joining me tonight on the show is Steve Roberts from Laminar, and we have Peter Jolly, who is the Global Head of Research for the NAB, and they're here to answer any of your questions, and to some extent it's economists at 20 paces. So hopefully we'll be able to get some arguments going and some interaction. Welcome, both.
Thank you
First
very
time
much.
to come on the show, which is great. So Steve, can I just start with you? Tell me a little bit about Laminar and the role you play. I said you're the economist, but maybe you're also a little bit of a strategist and that sort of stuff. So what's Laminar and what do you do with it?
Yes, Laminar's a broking company and also a fund manager, also does a little bit of advisory, and specialises in fixed income securities, interest-bearing securities. We have a fund that we're particularly proud of. It's been going for 4 years now.
It won an award, didn't it?
It won the Hedge Fund Award, which is an unusual award for it.
For a credit fund.
For a credit fund, and because there's no leverage in it.
They don't borrow any money, they just buy paper.
But I think it was picked for that award because it's had a really good return.
It's, what's the return been?
Well, since inception, 21%.
Whoa.
So that's not bad.
Don't just straight away jump into that.
No, we can't guarantee it in the future.
That's right.
Less
Past
than that now.
performance, no reflection on the future, and everyone be calm. Don't sort of ring up yet. Mate, global head of research, and I think of that in terms of now that I'm at the NAB, the breadth of access to information. You know, big business bank lender and that sort of stuff. So you've got the business report that you bring out, the quarterly report. What does it mean to be the global head of the research? How does that breadth work out, and how do you sort of get your arms around it to some extent?
Right, it's a pretty...
We'll be over in an hour, folks.
Yeah, I was going to say, it's a pretty grand title. Should we do the tour of the globe?
That's right.
I mean, like, I get to have this sort of, pretty fun job to look after a research team. We've got people sitting in, London, New Zealand, Asia, and of course predominantly in Australia, and covering, all manner of markets. I mean, my training actually is an economist, so it's a bit like Stephen as a background, but we have people looking at foreign exchange markets, bond markets, credit markets, a little bit of equity as specialities. So, great team, and just say it probably demonstrates a bit of breadth of geographical coverage, and also a bit of product coverage as well. So
but that business survey has been very popular, hasn't it? In terms of, I get the sense from a lot of people they're always waiting for that, and whether it be just in the media, but it's also customers that are trying to tap into, what the business sentiment is in general.
Yeah, so what you're talking about is the NAB business survey. It's certainly the longest running survey in the country, and it gives you a great timely. I've got to say, we don't survey just our customers. We survey all manner of businesses across Australia, and it gives a very timely sort of gauge about where's the economy at right now. How are businesses feeling about their employment, their investment opportunities, and I think it's as I say, incredibly timely. The information gets out very quickly, very closely followed by us and also by authorities like the Central Reserve Bank and Treasury as a guide to where the economy is at that point. Yeah,
right. So let's talk about the economy. Steve, I guess the way when I talk about what the government's talking about, our debt problems and the like, my sense of it is, from a market perspective, we have a AAA rated credit. We go out for 12-year or 15-year paper. We ask for $7 billion. They give us $25 billion. We say we'll deal at 7 or 8, and we get it at 4 3/8. So we get it. Rates are incredibly low. We can borrow at really low rates, but the government says we've got a massive debt problem. And is it, to some extent, is it around the question of timing? So we have a debt problem later, not right now, or what do you think it is?
It's not an immediate debt problem, because when you look at Australian government net debt, it's actually very, very low by the standards of just about any other country internationally. There's a potential debt problem going out over the next 5 or 10 years, and that really comes back to how the budgets are framed, not just this one, but the ones over the course of the next few years, because there's a bit of a time bomb inside the budget on the expenditure side. It's largely coming through health and also aged care. And those issues, if they're covered by revenue, fine. But or if somehow we manage to contain the costs in those, that's fine. But it's not an imminent problem, and that's something where I think people can be a bit confused about the discussion at the moment. We're not going to hell in a handbasket over the course of the next year.
It certainly feels like we might be. In terms of what Stephen's talking about in terms of covered by income, with the US, they have the same problem, but the income levels are coming up because the companies are making better tax returns. Is that... I've got a two-part question.
Yeah.
Is that something that can solve for us? That's number one. Number two is, when Stephen talks about having one budget, doesn't it mean that following governments need to be on the same budget path, as opposed to, let's say, in 2 years' time when they want to win an election, forget what we said year one, we've really got to spend some money to win the grey vote or whatever.
Yeah.
Not that you're that grey, but win your vote.
Increasingly grey. Well, let me answer the second question first. I mean, I've got to say, as much as there's a hype and bluster around, and I totally agree with what Stephen says, we don't have a budget issue today in 2015-16, but we have a looming one. So I've got to say, one of the good things about this debate we're having now, it's probably a good time to have the debate because it was a medium-term kind of issue. And I think both sides kind of recognise it, and I think there'll be one thing to make. And the other point to make is that we have a medium-term issue, nothing like as great as some of the other countries around the world, but we've got to turn a 2% of GDP deficit into a 1% of GDP surplus over the next decade. In truth, it's non-trivial, but it's there's still a little bit of work to do, yeah. And so I think by making it plain to everyone in a very transparent way, it probably serves the wider debate quite well.
Ending the age of entitlement.
Ending the age of entitlement, yeah. I mean, and coming back to the US piece, I mean, it's very hard to make any kind of reasonable comparison between where Australia is and where the US is in truth, yeah.
Yeah.
I mean, the US really, Stephen talked about a time bomb. I mean, they're in it, yeah.
Yeah, they've got that time bomb happening.
They're having it right now. I mean, debt levels in Australia, even gross debt levels are, 25 to 30% of GDP. In the US, those numbers in there are 100.
Yeah.
So I mean, they are living through this nightmare, and they can't quite get their political system, organised to actually deal with it, which we don't have that problem.
No, I mean that's your Obamacare story, isn't it? Obamacare is the strategy that the government wants to implement, and the politics around it means that it's driven by dogma. I don't believe in it, so I won't do it. I mean, universal healthcare, I don't believe in it, so therefore I won't do it, and I'll try and derail it, as opposed to look at the benefits it might bring in terms of reducing costs, because clearly with that Obamacare coming through, they are reducing some of the healthcare costs over time.
In aggregate, that's true. I think they added to a bit at the start, though.
Yeah,
I mean,
for sure.
So I don't know if Obamacare is a panacea for all that. It was,
No, but
I take your point.
it's around the idea of trying to get a policy setting that we can all agree on.
Yep.
One thing we can agree on is that Peter's brought a very scary chart, and so if you want to bring up that chart, please, Leah, that will talk to the point that we're trying to make, and the government is conscious of, is the fact that we have to work longer, and hopefully not for less. But in order to get an appropriate retirement piece, we need to show what's happening. So, do you want to walk us through that, Pete?
Well, that's a couple of lines I used to demonstrate the thing that Stephen was talking about, sort of this time bomb, if you like, this medium-term position. This is the slide that Mr. Hockey probably should show, because it actually demonstrates the story. And I like you tell the sort of the little parable, if you like. I mean, back in 1908, when the age pension was agitated for, as I understand it, the Prime Minister of the day, Alfred Deakin, and shortly after the other one, asked the government actuary, how long do people normally live? And he said, well, very few people make it past 65.
Yeah.
And he goes, that sounds like a pretty reasonable number.
Yeah, that's a good number.
Yeah, and life expectancy for males was 53 then. For females, 56. Now we have life expectancy for males at 80 and for females at 83. And that qualification for the age pension has not shifted. So you don't have to be a great mathematician to work out that we end up paying an awful lot more money. And so the Audit Commission's recommendation was that the brown line there should in some way sort of reflect what the blue line's doing.
Yeah.
And they should sort of move in parallel. And I think that's what we're going to end up doing.
Yeah, and I think
lifting the retirement age up, or the qualification for the retirement.
Yeah, and then we're talking about those who were born after 1965. It'll go to 70, which when you look at the chart that you've brought, 70 doesn't seem to really cut it. And I think it's around the politics of trying to get people aware of it. And you might be right. I don't want to make any political statement around whether the government's right or wrong or whether it's done a good job. But to some extent, it makes a lot of sense to have the conversation over the kitchen bench and talking to people about, okay, you'll have to work to 70, because what's the holistic response from a policy setting?
Yeah.
If you're working at 70 at the NAB might be one thing, or at Laminar might be one thing, but if you're working as a plumber, digging a ditch, as a 69-year-old, that's an entirely different policy setting that you need to think about. So
it's very different.
And how do you get people into the workforce on a casual basis? It's acceptable, and it's a real challenge. So we agree that the debt problem isn't today, but it may be tomorrow.
Yeah.
How does that relate to somewhere like Japan? Our debt problems, their debt problems. You know, do you want to talk about the fact that Japan is in such a parlous state? What's your thoughts on that?
Yeah. Well, Japan's debt is very much greater than Australia's. You're looking at over 100% of GDP for government debt. It's interesting, though, in Japan, they are able to manage that debt still with relatively low interest rates, and that's because they're big domestic savers. So domestic savings still has a preference for bonds. Whilst that persists, they can just about get away with that. But the problem with Japan is there's very little growth. And that's part of the policy story now in Japan, is how to kickstart that growth, how to make people believe there's some inflation again, and how to get some better growth.
Working?
I think the jury's still out on it. I think certainly the policy prescription they've got there under Abenomics is promising. But there's a lot of reforms that need to occur, and amongst them are, for example, getting more women in Japan into the labour force. Is a huge reform which needs to go through at some point. So all these sorts of things need to occur because the demographics in Japan look absolutely awful.
We will talk about it after the break. We have to go to a very short break, but feel free to call us on 1300 30 34 35. The email is yourmoney@skynews.com.au. We'll be right back after a word from our sponsors.
You need a great website. Why not do it yourself? With Wix Drag and Drop Website Builder, you don't have to be a programmer to create a professional website that looks stunning. Go to Wix.com. It's easy and free.
I love flying. Every minute counts, huh?
Sure.
I bet you're thinking you wish you had more people on the ground.
Exactly. Someone who could help me in every country would be good.
I'm thinking maybe you already do.
With business bankers wherever you're doing business, no one connects Australia and Asia Pacific like ANZ.
I think I might watch a TV show.
Oh, I know a good one.
Because I'm sponsored, good things are happening in my community.
Sponsor a child today to help whole communities grow. Call 13 32 40 or visit worldvision.com.au.
Explore a world where news comes to life. The new iPad app from The Australian is ready in newsstand when you wake up. Richer, more interactive and easier to explore. It's your daily edition of The Australian, reimagined. The Australian. Search, know, more. Subscribe today.
Start the week with a different viewpoint. Join me as we look at the crucial national issues from outside Canberra's politically correct parliament.
That's the sort of rhetoric that we're protesting against.
Sorry, rhetoric. There'll be big interviews, lively debates.
The Labor Party has been re-energised.
Insightful analysis.
Very little confidence in the state of the economy.
It'll be unashamedly mainstream and there'll be unashamedly strong opinions.
You say it's a contradiction, Chris. I don't accept that it is.
Join me for Viewpoint, live Sunday nights on Sky News.
Welcome back to Your Money, Your Call. I'm Mark Todd from the NAB, and joining me tonight is Peter Jolly, who is the Global Head of Research for the NAB, and Stephen Roberts, who's an economist at Laminar Funds Management. They're here to answer any of your questions. Feel free to call us, 1300 30 34 35, and the email is yourmoney@skynews.com.au. And don't ask any questions about why economists get it wrong, only why economists get it right, because it's very hard to be an economist. So we're talking about Japan. Yeah. You were saying off the break how hard it is for them to grow, and the reason being?
Well, fundamentally in the end, an economy only grows from two sources, and that is how many people you've got and how hard they work, how productive they are. And as hard as Japan works, unfortunately, the number of people they've got is shrinking. So it shrinks at about 1% a year. And so no matter how hard you work, it's very difficult to kind of drive a positive growth. You compare that to, say, Australia, where our population's been growing at 1.5% a year, something of that order. I mean, so it's very difficult. We did say, combine that with the fact that they have this very insidious deflation. Deflation's very negative for an economy, because if you think the price is going to be lower in a year's time, you don't buy it today. Yep. Yeah. And so I think to a degree they've corrected that, and that's been Abe Economics has sort of got them out of that funk, we hope.
Yeah.
But they're still going to be punching into those headwinds of those demographics.
But that's been going for how long?
Well, they've been in severe deflation for a decade and a growth funk for 20-odd years, yeah? I mean,
It's been a long time.
Yeah.
And that requires, more people who are younger and who may not actually be Japanese because, you've got to import people who you will want or welcome into the country, and that's part of the policy mix that they can't get. They have to win them over to that argument.
It's a difficult economy for migrants, and so it's fairly adverse to migration. And I don't know how you change that, but something has to change there if they're going to make a difference to the average age of the Japanese population, which is going up faster than anywhere else on the planet.
It's quite scary. Yeah. So what are we going to say about Europe? It's a Japanification of Europe. I mean, Europe's got the same possible problem in that it's an old world community and you've got, and I need to understand why is so there's the deflation pressures down there, there's the concern, but I suppose the other thing I was looking at, Spain's been upgraded by a notch by Fitch. Unemployment in Spain is 25%. Europe doesn't seem to have done anything from the GFC. They don't seem to have had a policy setting that's changed other than let's do a little bit of repo. So time solves all wounds. I mean, I don't, what's happening? What do you think about Europe?
Well, I think I love that rolling off the tongue. It doesn't quite roll off the tongue, the Japanification, does it?
But
I mean, I think that's the path that I think policymakers very much fear within Europe because, as you rightly say, I mean, the demographics are very punitive within Europe, particularly places like Spain, Italy, France even. They're just about as punitive as Japan's. That's why you've got the ECB, the central bank there, so worried at the moment about deflation because they see we've got these terrible demographics. And what if we end up with Japan's deflation as well? And they're going to fight very viciously to stop that.
But how?
Well, I mean, with what we know now, just more quantitative easing, in fact. I mean, so they'll be prepared to do more of that should the time come. I mean, now whether... I don't think it necessarily... I'm kind of agree with you. I don't think it necessarily solves... Monetary policy is not the panacea of all problems. I mean, it doesn't solve a lot of other structural sovereign issues, but I mean, I think...
There's got to be a holistic response, isn't there?
Well, there does, but when you look inside Europe, we've also got some economies which are doing rather better than others. And I don't think we should lose sight of that. So the Germans are doing particularly well, which is fortunate because it's the biggest economy in Europe. Yeah. And also, even amongst those that were considered difficult economies not so long back, Ireland's actually making quite a decent recovery now.
But it's so small. As a percentage
of the
population, Ireland is tiny. I mean, for the viewers at home, Portugal in 2012 had 10-year interest rates at just shy of 19%. They issued a bond last week for 10 years at 4 3/8. I mean, seriously, what's Portugal done in the last 2 years to suggest that interest rates... I completely agree that 19% interest rates for 10 years was the wrong rate. But I also don't think that 4 3/4 for what they might have done. I don't understand what Europe is doing to reward other than people just trading because it's the way to cash.
Well, I was going to say, I mean, what's really happened in that case is when they're as high as they were, I think people were fearful that will the core of Europe, will Germany, for argument's sake, let Portugal go? Will they let them default? Will they do that? I think we've come to the conclusion now that they are. Through this crisis, Europe's got closer together, ironically enough, and so...
In desire, but not in policy?
Yeah, it's been a Trojan horse sort of federation type sort of setup where, they went to the brink and now they've sort of agreed that we probably are all together in some funny sort of shape, form. And
because the German government came through and said, QE was okay, they can do that.
Yeah, so effectively the Germans are going to pick up the tab. I mean, in truth,
yeah. Well, they got the benefit of the euro.
I think it is very fortunate the German government is very pro-European too. Yes. So under Angela Merkel, very supportive.
Your government, the English government.
Oh,
maybe it's not your government.
The British government.
The British government doesn't
obviously are not part of the euro. But having said that, at least they had the flexibility of a currency that could move, and they're actually having a reasonable recovery.
We can talk about England after the break. We're going to go to another very short break. That was a very quick time. Feel free to call us 1300 30 34 35 for any questions you might have on Europe or Portugal, and the email is yourmoney@skynews.com.au. We'll be right back.
CommBank help you be retirement ready? CommBank can. Book your free initial consultation with a Commonwealth financial planner today.
What do you want for Mother's Day, Mum?
Ooh. Microgreen sea tray only $9.98. 3-piece bistro setting $46.90. Euro design pot just $14.98.
Lowest prices are just the beginning.
One travel booking site is unmatched in separating out your best flight choices, helping you to make clear comparisons and land the airfare you really want. It's Webjet.
You need a great website. Why not do it yourself? With Wix Drag and Drop Website Builder, you don't have to be a programmer to create a professional website that looks stunning. Go to Wix.com. It's easy and free.
The Australian subscription television industry delivers more channels.
It's the greatest story.
Go! Here we go!
Science has ever told.
More choice.
Time walks the park.
And month after month.
Cheating song.
Year on year, more satisfied customers. Spectacular! Employing 7,000 people and adding more than $30 million in activity to the Australian economy every week. The Australian subscription television industry. We've got quite a story to tell.
Welcome back to Your Money, Your Call. I'm Mark Todd from the NAB, and I'm joined tonight by Peter Jolly, who is Global Head of Research for the NAB, and Stephen Roberts, who is an economist at Laminar Funds Management. They're here to answer any of your questions. 1300 30 34 35, the email yourmoney@skynews.com.au. And we have our first email for the night, and that email is from Bob from Ashfield, and he writes, why is there no inflation at the moment? A timely email. Stephen, why is there no inflation?
Well, there's a little bit of inflation because on the
the
most recent one, it was 0.5% in the quarter, 2.9% on an annual basis.
Yeah.
So it has actually been accelerating a little bit over the course of the past year. Fortunately, the most recent CPI wasn't quite as high as people expected. But when you cut inside it, you see two things. Private sector, very little inflation, and so private sector prices are rising around 2% a year.
Yep.
Break out anything related to government and government taxes, and it's accelerating at 4.3% a year.
So the government's taxing us more.
So you've got this dichotomy between government prices and private sector prices.
Is that your interpretation as well?
Oh, no, Stephen's dead right. I mean, and I was going to say another lens you could bring to it is that, why there's no inflation. I mean, in truth, the inflation ultimately is just, where are wages, where are firms' margins, and, we also add in some imported goods, so the exchange rate gets into the mix somehow. But if you go look at, the core part of that, which is wages are growing at the lowest growth rate in a decade.
Yeah.
And that's because,
so it's the lowest in a decade is the wages growth.
And that's because our unemployment's, at the highest in a decade. I mean, it's, 5, 8, 6%, and if you add in extra people who are employed who want to work a bit more, then the underemployed, it's even higher than that.
Yeah. So there's natural softness, isn't there?
There's a natural softness to the economy. There's no wage pressure, and I think that's ultimately coming through in the inflation data.
Do you feel like we're, say, 2 years behind the United States, or we're having our jobless recovery, but there will be this drive to cut costs, ship all the money out? We see Rio and BHP absolutely decimating the mining services sector by deciding not to do work that they had traditionally done. And you feel that everyone is focusing on the cost side of the business now, and that therefore puts that downward pressure. And I think it's just a natural balance around where people fly in, fly out in the mining sector saying, I want all sorts of money. Now that's just not happening. And I think that plays out in other parts of the economy. So do you think we're going through a jobless recovery?
Well, I think there was an element of that, but I'm not so sure it's jobless anymore, because we're starting to see the transition from the mining boom across to the eastern seaboard, which is now largely a housing boom, and particularly so in New South Wales and also, of course, in Queensland. And one feature of the budget, it's not just the Commonwealth budget, but also the New South Wales state budget, is there's going to be a fair bit of infrastructure spending over the course of the next year or two. So I wouldn't be at all surprised if you don't see a little bit more wage pressure in things like construction wages, building sector wages, particularly on the eastern seaboard,
And maybe to some extent Bob's email is talking about more inflation globally because there's no inflation in the rest of the world. So why is there no inflation in the United States?
Yeah, in a way I think it's relatively easy to understand because again we've been through a very incredibly weak period in the global economy, and unemployment rates, even though they're falling, remain still very high relative to long run averages, and that keeps downward pressure on wages. Again, the US, we had some wages data early on this week from the US. Wages are not growing in the US at all, and that's one of the reasons why inflation's as low as it is.
And has that been a surprise? I mean, I think you hear Lockhart talk about it. It looks like inflation is going to start to pick up. Yeah. Is that your sense of it, guys? Do you think that in the United States we'll start to see it? Because I'm personally of the view that corporate America thinks they've worked it out. Cut as much cost and keep the pressures down, and we just keep our margins, pay dividends, buy back stock. What's your interpretation? Do you think there'll be upward pressure in inflation in the United States soon?
Not for a while. It's, I think there was a fear that quantitative easing would lead to some pickup in inflation eventually. But what we've had in the United States is that the potential growth rate, we're still running below it. It's, we have been for 5 years now. And that's what's driving all that behaviour in the corporate sector and continues to do so.
We have our first caller for the night. The caller is Richard from Sydney. Hello, Richard. How can we help you?
Hello, Mark. Look, just on the European thing, I mean, would it be to consider the world like as a business, and I mean, consider the world's balance sheet, it's spitting off obviously that much cash that, I mean, of course, these bond rates, 10-year bond rates in Portugal, and I mean, even Greece under 5%, I mean, compared to our 10-year rates around just over the 4 mark. And I mean, will that eventually, with all this cash, and I mean, the advent of China producing more and more and more, will that just keep interest rates lower and lower and lower for the foreseeable future? Thanks, fellas.
No problem. The Greek bond, the Greek 10-year, Richard, the year to date, in April, let's say, beginning of May, has produced a 28% return. So remember when they came into the market, everyone said, why would you buy that? And it's giving you a 28% return. I, personally, I'm not a trader, but I would have taken profit, 20%. I mean, so Richard's point is, his question is, where do interest rates go?
I mean, I take the point, I take the question as well. I mean, ultimately a bond is, I mean, in two things. I mean, and I think we've got to separate these pieces out. I mean,
sorry, they're telling us we have to wrap. Is that right? You have to wrap already? Peter was just right in the middle of it. Well, we'll come back on that because Peter's got a lot to say on this. We'll be straight back soon. What happened there?
With CFDs, I can trade on the rise and fall of indices, shares, forex and commodities.
It's important I can pursue 24-hour trading opportunities and still control my risk.
I use CFDs when I want to trade the markets without putting up the full value of my position.
That's why I trade CFDs with IG, the global CFD specialist, creating opportunity since 1974.
Because I'm sponsored, good things are happening in my community.
Sponsor a child today to help whole communities grow. Call 13 32 40 or visit worldvision.com.au.
Slippers, mate. Mate?
No one likes fungal nail infections, but there's a file-free solution. Rejuvenail kills the fungus without needing to file your nails first. Rejuvenail. Do your nails a favour.
Want rewards that are out of this world? Welcome to the world of yes. Want to go places faster? Yes. Use your points with a choice of airlines to fly where you like? Yes. Last year we helped our card members enjoy over 14 million great experiences by delivering rewards which are faster, smarter, better. Yes. Just part of the Going the Extra Mile service we deliver daily. American Express. Realise the potential.
I was travelling through Southeast Asia when I was badly injured in an accident. Covermore really took care of me. They made sure I got the right medical treatment, and they even flew my mum over to be with me.
Ask your travel agent for Covermore Travel Insurance.
This is a Labor Party criticising the likelihood of Tony Abbott breaking a promise, but when he wants to keep his promise to abolish the carbon tax, they are forcing him to break it.
But that doesn't mean he's breaking one. In this case, he is the architect of breaking the promise.
Every time
he's going to suffer for this.
Welcome back to the show, and as we were talking prior to the break, we had Peter telling us about the Greek bonds and what's happening with those. So, sorry, mate.
I was just going to say that they're a bit of a special case, I mean, for that matter. And because if you think about the Greek bonds and why they've done so well, I mean, for the bulk of that game was actually because we got over the fear that they weren't going to, collapse, and our debt losses were going to be less. So we removed the credit risk, if you like, from the bond. The interest rate risk, I do tend to agree with caller Richard, actually. I mean, there was an awful lot of money still around the world looking for a home. And we can see that that's keeping bond yields very supported. I mean, longer dated bond yields. I mean, the fact is that if you have the Federal Reserve, for example, and it's true of Europe as well, offering you 0% for 1 day money or 1 month money, a 10-year bond yielding 3% seems incredibly attractive.
Yeah.
And that's that weight of money, which I think is still working on bond yields.
Is that your interpretation as well?
It is, and I think we've got these very low short-term rates for still some time to come. Even in the US, I think.
So what's when Janet Yellen says 6 months is a short term, some time, is that both your interpretation? Because I'm fascinated by this idea that the money, we do taper. We go from 85 billion to 45 billion. We assume that interest rates will go up. Well, in the event they don't go up, something should happen. Well, all that's happened is that people bought more bonds. And as you said, they're not the only buyers of the bonds, but essentially the crowding out should have stopped. There should have been some movement around cash. Why is there so much cash on the sideline? Or, why is there so much cash around?
It's the same
equity
old
markets
problem.
are rallied.
You really need private sector credit to come up and take up that slack, and so the funding of the private sector is still not putting a lot of pressure in there.
That's true.
And so we've got these very low interest rates persisting at the short end, and in the case of the United States, on the latest interpretation of what Janet Yellen said, I think nobody would be looking for a higher short-term interest rate this side of 2015.
Yeah. Janet 16.
Janet 16, they're calling it, right?
Calling it. I mean, it's kind of the other thing that's worth thinking about. I mean, I totally agree with what Stephen said.
Let's stop agreeing. Come on.
Well, I tried to disagree with it earlier, but I mean, like, an absence of inflation, an absence of fear about the Federal Reserve lifting rates. And I've got to say, one other aspect I think that's very relevant is that stock markets now, you've got the great man Buffett telling people that maybe stocks are a bit toppy here. They've done 30%, US stock market at 30% last year. If you're looking at meagre returns, just say the stock market's flat over the next year, I mean, a bond at 3%, it's not
becomes attractive.
Becomes attractive, yeah. I mean, so...
And that's the great thing that's been happening, hasn't it? It's been the pension funds and the insurance companies rotating out of the equity market saying, I've just made 30%. What's my expectations for 2014-15? Well, it's not going to be 30%, so let's just go and buy this. And to some extent, Stephen, isn't it true that the GFC meant that these pension funds and insurance organisations were underfunded compared to their liabilities? They were stretched around trying to meet their liabilities. Isn't that what's happened to those guys?
Yeah, it's true. They were. And, I suspect that what's happening now is we're getting that asset allocation that we were talking about there. And it is basically that the equity market has moved a very great distance, and people are rolling their way back into bonds again.
So that takes some of the sting out of the projected forward. Is that the same thing that will happen here in Australia, the movement in the equity market, because people have rotated out of that, or are? I mean, I feel that the Australian equity market, in the top 30 stocks, it's the self-managed super fund that's holding that up.
Yeah.
And the fund managers are playing below that, looking for value add. So I don't feel we've got the same thing because of the high dividends that we pay.
Well, and the thing, and it's, I think even stepping back a little bit, I mean, I don't think our stock market hasn't done quite as well as the US has either. And I think reasonable metrics would say that perhaps they're a little bit more overvalued and maybe we're a bit fairer. I mean, so I don't think there's quite the same pressure.
I'd agree with that.
And as you say, the dividends are a bit higher as well. I mean, the dividend yield in the US is only a couple of percent.
Yeah.
Yeah, I mean, here the average dividend across the ASX 200 is 4% or something of that order. So, yeah.
Do you think that, how does that then feed into the RBA's conundrum? The RBA's conundrum, as I see it, is we're trying to make the mining transition into the broader economy. We want to move that over. We need to get the currency down. We've got the currency at historically low rates, but it's as strong as 10 men. I mean, how does the RBA? How do you think the RBA is performing, and what should its next steps be?
I think they're doing a reasonable job at the moment, and so basically what they've been doing is saying, look, we've got the cash rate down to the lowest level it's been since 1961, so it's a very, very low cash rate, almost an emergency cash rate, and their commentary is what we need now is stability at this rate for quite some time to come. So they're maintaining this very, very, very low cash rate, which is starting to work. You only have to look as far as what's been happening in the housing market to see this starting to gain some traction. And it's noticeable that retail spending numbers in 2014 turning out of 2013 were much better than they were going back a few months earlier. So I think it's starting to work. Still haven't got much inflation, so their view is that a little bit of a blip we have had in inflation is going to come back out again. So at the moment it's reasonably stable. The only real problem is that the currency refuses to go down. It's because
we're high by the rest of the world, like high rates compared to the rest of the world if they're going to be at zero. I mean, what's your interpretation of the RBA? Can you offer thoughts on how you think they're going? And to some extent, I asked Stephen what they should do, which is keep it stable. What do you think they will do? Slightly different.
Keep it stable.
Yeah, so you think they should keep it stable. You don't think they should lift rates. You don't think they should do anything with rates.
I think in time they should, but I think we need to see them be going up. But there'd be it's a lot of months to go before we start to see that happening, I think.
Yeah, well, at least we have a little bit of a disagreement.
Thank you.
Because I'd say not just months, I'd say quarters. I mean at least. I think this is going to be an unusual interest rate cycle because typically, when the RBA cuts interest rates, they don't tend to stay too long at the low of the cycle. 6-9 months they start lifting again. I think this is a special case. In the sense that there's some very kind of big headwinds for the economy. We talked about the mining boom. You just talked sort of transitioning. We talked a little bit about the budget, which is a headwind for the economy, and we think about where the exchange rate is, which is also much too high for some parts of the economy. So I think we're going to be looking at a cash rate at 2.5% for quite a period, so certainly well into next year, and maybe it doesn't even start to rise until the back end of next year.
And you mentioned the budget. What are your thoughts on the budget coming through?
Look, I think it will be tight. I don't think it's going to be as tight as the headlines. The government's a bit of political theatre, trying to lower the bar a little bit and get people prepped up. As I said, when we do the numbers, we've got to shift our deficit from probably a couple of percent of GDP deficit to 1% over the next 10 years. It's not that big an issue. It's tightening about 0.5% of GDP a year. It's not trivial, but it's not not, I guess, a disaster either. Yeah.
What's your thoughts on the budget?
Very similar, because I think in this budget the headwind from the budget will be about 0.5 percentage point of GDP, and it'll be something around that level or a bit less going out for the few years beyond that, and that will bring it back. And
so with all the theatre, as we're talking about the politics of it all, what do you think that does to consumer confidence?
Well, I think that's a reasonable point, actually. And I've talked to some businesses over in the last week who are saying, will this have an impact? If people start to think we're in a crisis, you can actually become one. I think it's a risk. I don't think it's the predominant concern. I think it raises a few alarms, but people will spend what's in their pockets, and if their house prices are going up, they feel okay.
Is that your interpretation?
Yeah, I'm rather hoping that when the budget comes out, people breathe a sigh of relief and say, gee, it wasn't quite as bad as we were led to believe, because I'm worried about the way in which this is being touted at the moment. That does scare consumers, does scare businesses.
Because hasn't that been the great conundrum for the RBA? The RBA has not been able to get their handle on the consumer. They've lowered rates in the expectations they do something. They haven't really done what they thought, which was, buy flat screen TVs or do whatever. And the consumer's been more GFC orientated and been conscious that repairing its balance sheet, saving money, being frugal generally. Isn't that the conundrum the RBA's got, or has
I actually think they've done a pretty good job, and the economy's kind of not far from where they would expect it to be. I've got to say the RBA, that period that we lived through the 90s and until the financial crisis, where we had double-digit credit growth, retail sales running at 7s, 8s and 9s, I think was a pretty unusual period, and I don't think it's going to be repeated. We built up a lot of debt. So I think, a little bit of household austerity, if you like, it's not a bad thing. It puts us on a sustainable path.
Hang on, is my wife watching? Look, we have to go to another very short break. We'll be right back after a word from our sponsors.
Explore a world where news comes to life. The new iPad app from The Australian is ready in newsstand when you wake up. Richer, more interactive and easier to explore. It's your daily edition of The Australian, reimagined. The Australian. Search, know, more. Subscribe today.
Can your bank help you be retirement ready? CommBank can. Book your free initial consultation with a Commonwealth financial planner today.
I don't mind sharing Andy with ColourBond.
I'm constantly thinking of new ideas. Here's an example, the jewellery, which is sort of the Mayans here, but it's also very street. They go to the movies, they get back, and there's a basketball court. I work with my hands. I'm a tool. It's basically the same as the house, but we brought it down.
Like a big doll's house?
Not like a doll's house. It's fun, it's art.
You are in some strife again, aren't
The
you?
Labor people are criticising Tony Abbott. The mob who burnt the nation now are criticising Tony Abbott because he's trying to put out the
The
fire.
only thing you blokes bring in your fire engine is petrol. That's all you bring, petrol.
This is a Labor Party criticising the likelihood of Tony Abbott breaking a promise, but when he wants to keep his promise to abolish the carbon tax, they are forcing him to break it.
But that doesn't mean he's breaking one because he's tried to keep it. In this case, he is the architect of breaking the promise.
Every time-
And I tell you what, he's going to suffer for this.
Welcome back to Your Money, Your Call, the Friday edition of Bonds versus Equities. Feel free to give us a call. We are still have the lines open. It's 1300 30 34 35. The email, yourmoney@skynews.com.au. And we have another email, and it's Philip from Crows, and he writes, what do you think of gold as an asset? Can I start with you? What do you think of gold as an asset?
Actually, in truth, I don't really think about it as an asset. I mean, and we were saying earlier, I mean, I think you're either an alchemist or you're not, and the way that people think about gold. I tend to think of gold as a currency. I mean, and and I think it's been a nice saviour or a nice haven away from the US dollar. I mean, the last couple of years it's done phenomenally well.
Yep.
But I got to say, I don't tend to think about it as a long-term asset. It doesn't sort of have a yield that spins off it.
Okay. What's your thoughts on gold?
Yeah, rather similarly, I think with the US dollar looking to be one of the better currencies perhaps over the course of the next 12 months, then gold's going to be against a headwind. And the second headwind against it is that we still haven't got any inflation really globally. It's not performing well as a, there's nothing to hedge against. It's and that's one of the issues.
What's your thoughts on the currency? I mean, in terms of the US currency, it was supposed to be, tapering was supposed to affect it, but it hasn't really done anything. I mean, we're still as strong as ever. So what will break us out of this coupling that we've got at the moment? Anything?
Well, I think the fact that the US dollar hasn't risen this year has been a great surprise to many. And I think it's not to say that it's a wrong view. And I think I agree with Stephen. So that in time the dollar will move higher. I think now we're probably going to have to see, tapering hasn't done it. I think we're going to have to see the Federal Reserve lift rates. I mean, and that will give the dollar a bit of a boost. And I think ultimately it's still right to have the view that the Aussie dollar comes off a bit over the next year or so.
Is that your thoughts?
Simply so, because the terms of trade are working against us. And it's realistic to expect the commodity prices are going to be somewhat lower over the course of the next 12 months.
We have another caller for the night. It's Mike in Noosa. And hello, Mike. How can we help you?
Yeah, good evening, guys. Hey, my question was on the size of the Federal Reserve's balance sheet.
Yep.
If it goes through the course, we're going to finish quantitative easing come September, October. The Fed then sits on a balance sheet of $4 trillion. What is the forecast management of that? Do they sit on those bonds to maturity? Do they trade those bonds out? You got any sort of ideas as to what the forecast is for that?
Yep. Let's pass over to you, Pete. What do you think? And I've got a view. I'll finish up with the view on that.
Yeah, well, it's an interesting question. I think the short answer is that they just sit on it and see the bonds mature. I mean, bearing in mind that the Federal Reserve, will not want to see bond yields spike, 2 or 3, 5, 10% by selling a whole lot of bonds into the market, and they can just manage it. They can sit on the balance sheet. The balance sheet winds down over a number of years, and it doesn't stop them lifting interest rates. So they just sit there.
Because they don't mark to market.
And they don't mark to markets, yeah.
What's your thoughts?
Yeah, simply so. I think they will be sitting on that for quite some time to come, because it's very important that bond yields don't spike up too quickly in the US.
I mean, I think it's a great question, and I think it's something that people need to talk about. But in the context of it, they are a different animal in the reserve. They don't march to the sort of normal beat than the rest of us. So I think that they will say, we don't mark to market. We are in a different policy setting, and I think to some extent, it's brand new to them as well. They wouldn't be able to look back into the history books and say, okay, what do we do? We've got a $4 trillion, balance sheet. What should we do? And that's part of the problems with the GFC. It's all very new in terms of how to create policy.
Yeah. And I think the other thing is you think about the Federal Reserve, why they got into this position. So for them, it's all about managing the quantity of credit and the price of credit.
Yeah.
And those assets or those bonds sitting on their balance sheet doesn't stop them doing those two jobs.
Yeah.
Yeah.
What's your thoughts on non-farm payrolls tonight? How significant is it? Thinking about the Fed, where do you think that sits? Does it affect them? What do you think will happen?
Yeah, the Fed's very sensitive to the labour market at the moment, and their view still is that the labour market's comparatively weak, even though we're a long way into the recovery. And it's one of the key indicators for when they might start to normalise policy. Tonight, I think the market's probably about right, a little bit above 200,000 for the non-farm payrolls, one of the better readings of recent months. It's slowly working its way higher, but the unemployment rate's coming down very, very gradually, but not enough, nowhere near enough at this point to convince the Federal Reserve that the labour market's recovered.
What do you think?
Fiercely agreeing again. Yeah,
my God, come on, guys.
A couple of 100,000 jobs. I think it's the right thing. I think the interesting one about tonight's data will be, for those who follow it closely, will be, we've had some very weather-affected data. US through December, January was one of the coldest winters ever.
Yep.
So the data was all very distorted by people not being able to get to work and the like. So this will be the first sort of clean read, if you like. Of where the US economy's at, and I think it's probably going to show. A couple of 100,000 jobs is an okay pace. It's not spectacular. Very good jobs numbers are 300,000 or 400,000.
But what does it need to be to deal with the population explosion? So in other words, but I mean, all those people who are young who want to work. How does that affect them? Like, what would the number need to be able to cope with the ageing population? So we're going to make people work for longer, but the young people need to get jobs, and that seems to be part of the problem in the States.
Well, a couple of 100,000 is enough to keep the unemployment rate steady to falling. So that sort of answers, the people coming into the labour force.
I think to make a really big difference, you're going to need to see quite a string of months of 300 to 400,000.
Yeah.
And we're not there yet. It's going to take a while, I think, before the US gets to that point.
And to some extent, how do you think the politics plays out in the States at the moment? So we're going to go into some election cycles. We've got November elections. That's going to possibly mean a change in the Senate. So the expectations are that the Republicans will reclaim seats that they traditionally had. So it's just the way the election cycle is working out. How does that play out in the United States, do you think? So in other words, a very difficult Senate versus, they don't own, the President doesn't own the House, now won't own the Senate. How do you think it works out from a policy setting?
It's
a question without,
Well, it is.
Notice.
Politics has been a quagmire for a long time. Difficult to make any policy, let alone good policy. I don't think that changes too much the logjam.
What do you think?
Well, I think it's probably fair to say that the Republicans came out of the shenanigans with the budget and the debt ceiling rather worse than the Democrats. And I think they'll be more reluctant, even if there's more of them in the House, to play those same sorts of spoiling games again.
Yeah.
Because politically it's working against them.
Yeah, it clearly has been. I think it's with those, the people who are on the maverick right, the Tea Party type thing. It's just been quite a challenge to work out policy settings where people out there screaming like Rubio and people like that. We have to go to another very short break, and we'll be back for our last segment for the night.
I'm looking for a provider who gives me everything I need to trade Forex in one place.
I want customizable charts developed for Forex traders, transparent prices and a stable platform.
I want a provider that presents me with Forex trading opportunities 24 hours a day.
That's why I trade Forex with IG, Australia's #1 Forex provider.
Turn design into dynamism. Turn inspiring into electrifying. Turn stunning into thrilling with the all-new BMW 4 Series Coupe.
These aren't just tickets to some skinny jean boy band. These are the doors to paradise. And you are no longer ordinary parents. You are superheroes. How do we know? Because every year we thrill card members across the world with millions of the hottest tickets and the chance to see their idols. Tears of joy and pounding hearts. Just part of the rock and roll service we deliver daily. American Express. Realise the potential.
Start the week with a different viewpoint. Join me as we look at the crucial national issues from outside Canberra's politically correct parliament.
That's the sort of rhetoric that we're protesting against.
Sorry, rhetoric. There'll be big interviews, lively debates.
The Labor Party has been re-energised.
Insightful analysis.
Very little confidence in the state of the economy.
It'll be unashamedly mainstream and there'll be unashamedly strong opinions.
You say it's a contradiction, Chris. I don't accept that it is.
Join me for Viewpoint, live Sunday nights on Sky News.
Welcome back to the show. I'm Mark Todd from the NAB, and I'm joined tonight by Peter Jolly, Head of Global Head of Research for the NAB, and Stephen Roberts, who's an economist for the Laminar Funds Management. They're here to answer any of your questions, but it is the last segment of the night, so be quick. 1300 30 34 35, the email yourmoney@skynews.com.au. And I suppose I just want to end up with, we've talked about the weight of money, and it's hard to find any value other than precious coins, which Stephen is a great aficionado of. Is there any good value in the market? What's the low-hanging fruit? Is there something you think? Is it just cash? What would you look at?
Well, certainly not cash. And I think looking for good yield still, I think, is the low-hanging fruit.
Is there any such thing?
Well, it's still there in the credit market to a degree, even though the spreads have come in a long way. They're still coming in because the cash rate is low and is low for the foreseeable future. The economy is slowly working its way higher. Yeah. So that's one area still of low-hanging fruit, and we're attracted to that with the Laminar Credit Fund. We still think there's opportunities there. But also, I think inside the equity market, every time the banks get sold down, they present us an opportunity again because they're able to pay these dividends fully franked for a long time to come.
Yeah. I still like the idea that, I saw inflation-linked bonds trade today at 4.5% real. I think inflation at 4.5% is something you need to consider. And I do agree with you that credit, if you can get credit that'll give you a 5.5 to 6.5 balanced return and you have less stress. I talked to a client today and his portfolio's returned him 8% plus coupons. Right. And I said, look, is now the time for you to sell it? And he said, I'm not selling any of this. He said, where am I going to put the money? Yeah. And I couldn't, having started the portfolio, you probably just add to it rather than, start selling and buying something else. Is there any low-hanging fruit in your mind?
Not really, I got to think. I mean, I just agree with exactly what you just said then. I think we've got to, if buckle-in's the right term, for a low cash rate for a period. In fact, quite a period. And I think even when they do rise again, interest rates are not going to rise that far. So I think searching for yield, searching for good running annuity kind of income is going to be the ongoing challenge. And I think it's not going to get cheaper.
And to some extent, it's the key to it is changing your psyche around what's a low interest rate environment investment strategy. So this client I was talking to, 8% return, and he said, well, if I went into these other funds, I'd get 6. And I said, the difference between 6 and 8 doesn't seem like a lot, but it's actually 33%. It's actually, you've got to think about it from how do I invest in low interest rate environments. If you're buying something at 3% for safety and you go slightly out of that to get 4% and then start looking at 5s and 6s for some senior bonds, you start to think, okay, that's actually a meaningful change in pricing.
Yeah, I think it is. And if investors get in the back of their mind too that inflation really is in a groove now of low groove between 2 and 3%, as it has been and will be for the foreseeable future. Mark up on that inflation, and if you're getting a 2 or 3 percentage point return on that inflation, you're doing all right.
Yes, that's pretty good. Isn't it? What are you worried about? Anything at all? School fees?
No, well, we worry about that. I think from a macro perspective, I'm actually still a little bit worried about China. Actually, I've been more worried about China the last 6 months than I have been in the last 6 years. And so, they're managing a slowdown. And the economy's got bigger, the financial sector's got bigger, and policymakers' ability to manage that has lessened. So I think that's something to watch. I mean, I think the chances of something going quite awry in China have gone up. At some point over the next few years have gone up.
Would you agree?
Yeah.
I'm reasonably confident about the policymakers over there because in the past they've done a really good job when the Chinese economy has pulled back, going back to 04-05 for example, and they managed to handle the downturn then very, very well. I suspect that this group now are some of the most talented politicians around the world. Now, it's not to say that China won't experience difficulties because credit has expanded enormously in China. So there is some risk there, and that's a key one for Australia.
I think they need to be talented because I think the greatest conundrum for China is trying to keep it as a one-party state, and that means you've got to keep people happy. And one of the things they've got to fix up is pollution. They've got to fix up a whole range of social infrastructure, whether it be just health and well-being. And that's the hardest thing when you look at the size of the place and the way it's been super industrialised.
Well, I think that's right, but I also think you've got to think about the policymaker story. I mean, when an economy is small and simple, I mean, it's very easy for a policymaker to direct traffic, I
think of Singapore like that.
As it becomes bigger and bigger and bigger and more complex, I mean, it becomes a bit more difficult. I mean, I think that's the interesting thing.
And that's the classic argument you have over the dinner party with this. So why don't we be more like this economy? And you say, that economy is so small you can do whatever you like with it. You can move people over the other side of the road. But the complexity of these policy settings is so difficult. And the United States is, as you said, suffering from that complexity.
Yeah, policymakers would love the US economy to be growing quicker.
Yeah.
But it doesn't. Yeah.
It just won't do it.
Yeah.
Very challenging. Look, it's been great to have you on. That's all we've got for the show tonight. So I want to thank Peter Jolly, the Global Head of Research for the NAB. He's done a great job, even though he has been interrupted when he was talking about Greece. And Stephen Roberts, who's the economist at the Laminar Funds Management, which has performed very well. And I'm very pleased he didn't say that was the low-hanging fruit. To all the emails and the calls, thank you very much. Until next time, I'm Mark Todd from the NAB. Have a great night. Enjoy the weekend. All the best.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.